All right, so I have good news and I have some bad news on this Tuesday market update. Hey guys, welcome back to the Tuesday market update. My name is James J. And today's Tuesday market update is going to surround what we've been talking about for the last several weeks, which is interest rates and how they have been adjusting. So let's go ahead and get right to it. If you don't know, interest rates have been increasing. It's been a continual increase week after week after week. Slowly, they just keep creeping up. So this just came out. This is referencing interest rates for the last couple of days. As of last Thursday, there are some interest rates that actually top 4%, and some FHA mortgage loans on Friday were actually just a tick above 4%, right around 4.122%. This is ahead of schedule, meaning the projection for 2022 was that interest rates were going to get closer to 4%, but that was not projected until the end of the year. Okay. We're just starting. So I don't know if that means we're going to be somewhere mid fours come the end of the year, or if we're going to see a little bit of an adjustment in the market and these rates come down a little bit. But right now, a lot of people are absolutely in panic mode because interest rates just continue to go up and up and up. So, moving on, one of the things that's going to be affected by this increase in interest rates will be refinancing. So, if you considered refinancing, or maybe you put it off till this year where you had an opportunity to do it in 2021, it's going to slow down refinances because as these rates are going to go up, it's not going to make sense for a lot of people to refinance their mortgage if they're really not going to save. And for a lot of people, their interest rate will go up in doing a refinance. Now, with that being said, that does not mean it's still not a wise thing to do depending on your situation. So if you're thinking about refinance, you have questions about it, definitely reach out to me. I'd be glad to see if it makes sense for you to do that. But for a lot of people, this is going to hinder them from doing a refinance in 2022. Now, on a cash out refinance, on the other hand, these interest rates will slow a little bit of the market down on the refinance side when it comes to a cash out. However, if you're looking to get cash and pull cash or equity out of your home, having an interest rate of 4% or maybe a little bit above 4% may not be something that's going to hinder you because it's still better than maybe you going to get a home equity loan or a line of credit or something along those lines where you're going to pay even more interest. So depends on what you're looking to do. If you're looking to maybe do some updates on your home or pull money out for a pool or something along those lines, a cash out refinance might still work for you in your situation. But on a typical refinance of a rate and term, that market's going to slow down as these rates continue to increase. One of the things in this article, it did mention that a lot of loan officers that were hired over the past couple years for a lot of mortgage companies, they were focused on the refinance market, whereas now that market's slowing down. Now we're kind of just focusing on purchases, and a lot of companies are going to end up letting all loan officers go because they don't need that many loan officers if the market starts to contract a little bit, and it will. So we'll see what happens there. Ultimately, is it still a good time to own a home? Yes, and this is why. I mentioned this a couple weeks ago. If you look over the past 50 years of inflation versus home appreciation has outpaced inflation for the last 50 years. Okay. This is why you own a home because no matter what the interest rate is, and back in the 80s, guys, interest rates were double digits. We're still winning right now. Okay. Talk to somebody who owned a home in the 80s. they will tell you what their interest rate was. And chances are it was double digits. And I mean 12, 14, sometimes 18% interest on a home. Other than that, home price appreciation has outpaced inflation. This is why you own. So, this is another thing to consider, okay? Rental price appreciation. This is yet another reason why you want to get into home ownership, even if the rates start to go up a little bit. Because as rates go up, well, guess what? Your rent is going up as well, okay? Anybody renting right now that had a call or a letter from a landlord saying, hey, we're going to lower your interest rate, excuse me, we're going to lower your rents this month or next month? Probably not. Probably hasn't happened, and it won't happen. So rental price appreciation has actually outpaced inflation, as you can see here. Again, almost over the last 50 years, we're talking here. So you want to get into a home to shield yourself against what's the inevitable, which is inflation and price appreciation and higher interest rates, because these rates are not projected to go down drastically from what we're seeing. As I mentioned earlier, we're a little ahead of schedule. So the bad news is, yes, rates are increasing. That's the bad news. The good news is home ownership is still the best route to go to build any type of wealth and also to hedge against that inflation. So a lot of people are stressed out right now, understandably so. And if you've got questions, right, look at your situation, because everybody's situation is not the same. For some people, it still makes sense. If you're financially ready for a down payment and possibly paying closing costs, because it is still very much a competitive market, it's still a seller's market only from the perspective that there's more buyers than inventory. Okay. I happen to believe it is a buyer's market. I heard this a couple weeks ago, and I completely agree that the home you get today will be a deal in 2 years from now. So don't just look at right now. Look at what's going to happen in a year, 2 years. The house today is going to be a deal. So you got to think about it that way. So from that perspective, it's a buyer's market, right? It's a buyer's market if you look at it from that perspective. So if you have questions, please reach out to me. Let me be a resource for you. These interest rates and the changes that we're seeing right now, it's not unexpected. We're just a little faster than expected. So let me say that again. It's not unexpected. It's just faster than expected. We didn't expect to see rates like this until a little bit more towards the middle or the end of the year. And here we are sitting in the second month of the year, and we're already hovering 4%. So with all that being said, do what's right for you, right? You got to do what's right for you. I don't want anybody to panic because interest rates are going up. We all have to adjust right now. Everybody's got to adjust, but owning a home is still the best way to hedge against inflation. And it is the best way for you to build any type of wealth. All right. Remember, today is a deal. It's a deal right now. Keep that in mind as you're searching or as you're looking around and thinking, oh, I can't find anything. Guys, keep it's worth it. What you're going through right now as a buyer, it will be worth it once you get that home. It's going to be well worth it. So again, if you guys have questions about this, let me know. And I will see you guys on the next Tuesday Market Update. Take care. Hey, thank you so much for watching this video. And before you go, do us a favor, head on over to mortgagebosstv.com. That is our YouTube channel, okay? If you would give us a thumbs up for this video and subscribe.